Market sell-off continues this morning. What does that mean for the markets going forward for the rest of this week as we wrap up the month of April? That's coming up on 3 Minutes on Markets and Money. On Friday, the markets broke support of this consolidation range that the markets had been in over the previous week or so. That led to a pretty sharp sell-off on Friday. This morning, futures are pointing lower, suggesting a retest of these March lows going all the way back here really to early February. So as we kind of look at the markets, we continue to remain within this sideways kind of trailing pattern that we've had over the course of the last several months. It's been frustrating, but in the short term, markets remain very oversold. We talked about this last week. We should get some impetus here for a bit of a counter trend reflexive rally. Sentiment overall is very negative. The American Association of Individual Investors, professional investors sentiment, all very negative. Positioning by professionals also on the light side as well, suggesting that overall view of the market, that psychology, is also very negative. So again, from a contrarian viewpoint, we do have kind of the setup here for at least a reflexive rally. Now, that reflexive rally may not get us very far, particularly as we move back into May. Again, the first week of May, we're going to have the Fed meeting. The Fed's going to talk about hiking rates. Now, what could help spur a bit of a rally is at that meeting, if they do kind of start to talk about maybe the peak of inflation or some type of dovish language regarding their policy, that could help fuel a bit of a rally here. But right now, I'd be a little bit reticent about selling the market here because of this deep oversold condition. We're likely going to get a bounce of some sort. That bounce, as we've seen in the past, can be fairly vicious and fairly quick. If you're kind of in a position here where you don't like the markets or you're kind of offsides on your allocation, I'd be looking for a bit of a rally here to maybe rebalance that risk into. Don't expect to see this big rally in the markets right now going all the way back to all-time highs anytime soon. There's simply too many headwinds that are coming right now. Earnings have been okay. They're not great. And the ones that are missing are getting punished very badly, as we saw with Netflix and others. We're going to kind of see that here over the next couple of weeks. About 20% of earnings are in. So again, over the next 2 weeks, we've got a lot of earnings that are also going to be moving the markets as well. But again, kind of watch this oversold condition. Look for a reflexive rally to rebalance risk into. And again, then we'll kind of take a look at where we kind of go to next. But I would expect that by the end of this week, we'll be talking about a little bit better positioning in the markets than where we're starting the week, unfortunately, here on Monday. That's 3 Minutes on Markets and Money. See you back here tomorrow.